How to pick your first stock. I know it seems like a really tough choice at first, but don't worry, today I'm here to explain you everything that you have to know when it comes to picking your first stock. I will simplify everything, make it easy for you to understand so that you can finally start investing. That's a crucial choice that you're gonna make and also something that you will remember for the rest of your investing life. So follow up with me, I'm gonna explain everything right now. Don't worry, everything's gonna be fine. Let's go. The first thing that we need to find out is what kind of investor are you? To answer this pretty easy question, I'm gonna need you to answer 3 more questions that will determine what kind of investor you are. Okay, so the first thing is that everybody is different, as you probably know. So everybody has different investing strategies and everybody is a different investor too. So what do you prefer between those two choices? Do you prefer having a stable kind of passive income flowing to you every single month or so? Or would you prefer having your own stocks that you want to sell manually to make profit? For this, I'm going to go a little bit more in depth later in the video, but for right now, you have to choose between passive stable stream of income or selling stocks yourself manually to take profits. The second question I'm going to ask you is, do you prefer having a long-term strategy or a short-term approach when it comes to investing? For this, I'm going to help you out a little bit by giving you statistics. Short-term can be more profitable. Of course, you can day trade and stuff like this, but just know that about 90% or more that people that invest into the short-term are losing money the first year that they are investing. And with the 10% that we still have, only the top 1% can make enough money by doing day trading and short-term investing to actually live off of this strategy. I'm not really here to tell you exactly what to do, but just know that long-term investing over a long period of time is way more profitable while being less risky. So that's the strategy that I choose personally and that I recommend for everyone that starts to invest. Now, the third question is really important, and it's what about risk? We just spoke about risk. I said long-term investing is less risky than short-term investing, but what about risk when it comes to investing? Are you okay with taking risk, or do you prefer safer approach that you don't have to worry about? And this question also includes your age. If you are younger, you might be able to take some more risk because you still have so much time on your hands. And just know that the earlier you start investing, the better it will be for you. And of course, the older you are, the less risk you want to take, because of course, this money, you're gonna need it at some point, right? When you retire, you're gonna have money on your hands that you still want to have at this time. Now, if you have an answer to all of these questions, so you know what kind of strategy you want to aim for, you know what kind of risk you want to take, and you also know for how long you want to be invested into the market, you are now ready to go to the other step. Okay, now that this is done, let's go into a little bit more depth into the investing strategies. What kind of investments do you want to make? Of course, there are so many stocks in the market right now that how can you choose the one that you really want and that will give you better return? Let's start by giving you a few examples of what kind of stock you can actually buy. The first one, as an example, is penny stocks, a stock that is worth pennies or less than $1. These stocks are really volatile, really risky, and on the short term can be really good, but over a long period of time, most of the time you don't want to trade with these. Now you also have some pretty established companies that have less potential because they can't really explode anymore since they already have their business into place. But of course, if they are already established, there is less risk investing into these, and you're actually almost not taking any risk when you invest into a well-established company. Or do you want to invest into kind of one in the middle, so a company that is growing a lot but is still not really established? You have a lot of growth potential, but just remember, this is potential. It's not 100% sure that you will gain this potential. So when you invest into growing companies, you have a lot of upsides, maybe, and maybe not. So you're taking risk, but it's way less risky than penny stocks, but still way more risky than well-established companies. But of course, it can give you a lot of return since it can grow a lot in the future. Or the last one, and the one that I prefer, is actually a dividend-paying stock. So what is a dividend company? Well, it's a company that is so profitable that they have enough profit to reinvest into the business and continue growing, and at the same time, they take the rest of the profit and give it back to shareholders as a reward for holding their shares. So what I would recommend as a first stock that you invest in is that it is a dividend stock. And also, over a long period of time, this dividend that they are paying you can make actually an exponential growth of income when it comes to your portfolio. So yeah, just imagine you're getting paid, and every time you're getting paid, you can just reinvest this dividend into the company itself or in another company that pays also a dividend. This way your portfolio is going to grow faster and faster every single time. But also a more general advice is that you should buy a great quality company. And that's pretty much for every single stock that you buy, not only the first one. Because you never want to buy into a company that is failing. You don't want to buy a company that is falling apart. Because most of the time what happens is that the stock price also falls apart and you are losing money. And if you want some really profitable companies that are also really safe and that are growing super fast, you should look into the blue chip stocks. These stocks are some of the most known, like Apple, Amazon, all these big tech sector company, but also some of the like consumer side like 3M, AT&T, and all those big companies. In the description of this video, there are actually a few links that you can go and check out yourself about like the best stocks that are like well-established companies, really profitable and still growing a lot, that we call the blue chip stocks. So check it out in the description down below. Also, another great way of looking at these big blue chips companies and which one you might be interested into buying is to look into indexes. Indexes are sort of baskets that regroup a lot of stocks inside just one stock. So this way, for example, if you look at the S&P 500, that regroups the 500 publicly traded most performing companies of the USA. So if you just look at this basket, you can tell that these companies are performing amazing because they are into this index and they are really safe. So in my opinion, you should definitely go and check out on internet, write index funds and check out the stocks that are inside of these. If I can give you a few examples, look into the S&P 500, or if you really want like tech sector companies, go into the QQQ index fund. Now the next advice is that when you look at all these stocks, create a watch list. If you have this on your app, then just create a watch list on the app, or if you want to write it yourself, you can just write the stocks down. The best way is actually to create a watch list directly on your investing app so you can see the variation when it comes to the stock price of all these companies. This way you can tell when a company actually drops in price and it might actually be a good time to buy it. So this advice, create a watch list and check it every every week so you can tell if a company is underperforming what it's supposed to be, and that might actually be a good buy. Also keep in mind that the first stock that you're gonna buy, of course, as I said before, you're gonna remember this stock for the rest of your investing life. But this next advice will be to pick a company that you know and love yourself. Because this way, if you already love a company, you love their product, you love what they do and their business, it means that you are probably not the only one in this situation. So what I recommend you doing is, for your first stock, pick a company that you know and that you love. And this way, if you look into the indexes, you might find a company, like let's say you look into all these stocks, you watch Microsoft. You love Microsoft, you play some of their games, you play on their consoles, and you use them as your computer. Well, that's a perfect stock for you to buy. They also pay a dividend, which I recommend for your first stock also. So next advice is to understand the business of the company, because of course it's also great to buy a company that you just love, but you want to understand how they make money, why they make money, and how do they invest the money that they make. This way you will not have any bad surprise when you invest into a company that you know exactly what they are doing with their money. You don't have to go into really technical analysis, you just have to have an overview of what they do with their money. This way you are reducing a lot of the risk of you going onto the app and seeing that you lost 10% because the company didn't perform as well this quarter. Well, you love this company, you know they can do great, but they didn't. So always check a little bit of the technical analysis side. I don't want you to go into too much depth. Since you are a beginner, you probably don't want to do that. So if I can recap everything that I said, I want you to buy a great quality companies that you know and love, that pays a dividend, that you know that will grow amazing in the future, and that represents what you like. So the first thing you can do is actually to check out per sector, which sector are you really interested in. Then if you go into the sector, which companies do you know, which do you like, and which do you use? And then check if these companies pay a dividend, and then check the stock price history. Don't buy something too expensive and don't buy something that is crashing down. That's pretty much everything you have to know when it comes to choosing your first stock. Now, if you really want to go in depth when you bought your first stock, go and check out this video right here that will give you all the infos about how to start investing. And also go and check out this video right here that will give you all the investing mistakes that you should absolutely avoid. Subscribe to the channel if you want to see more content like this one, and I'll see you on the next one. Bye bye.